Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month. And that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store for this month. This chart features a CRB Spot Raw Industrials. This is a commodity index which is constructed from the prices of industrial commodities. It's different from most commodity indexes which have a high weighting for weather-driven commodities such as grains and softs. As a result, this series responds to economic pressures and correlates well with bond yields. Underneath is the OECD leading indicators. These arrows show that when this series bottoms, so too do commodities. There were a few times when a bottom in the LEI did not result in much of a rally in the commodity index, and they're flagged by these ellipses. There was also this situation in the late 1960s when commodity prices actually lagged the LEI, but not by very much. Right now the indicator is falling sharply, but we have to remember that it takes a long time to collect this data, so the latest reporting period is for March. Commodity prices have already started to rally, and at the end of May were above their 9-month moving average. Does this hint at the possibility that the latest LEI, when reported, will turn up? Well, this chart, which was our chart of the month at the end of March, says yes. It shows my master economic indicator in the lower panel. Note that when this series bottoms out, so do stocks. There was one exception, and that developed in 2001. The indicator bottomed, but stocks didn't respond. Certainly the indicator did forecast a better economy, but for once stocks were not interested. And that's probably because they were still unwinding from the tech bubble. You can see I deliberately covered up the last few months. If I uncover them, you can see that the last reading in the Master Economics series strongly suggests a bottoming. That's also good for stocks, of course, but if the US economy has bottomed, and we know that India and China are growing, I think there's an excellent chance that the OECD LEI, and therefore commodity prices, are headed higher in the next 6 months or so. If you enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our Intermarket Review, a monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.